Hello and welcome to our training today. Today we're diving into microloans. By the end of this training, you're going to understand what microloans are, how they work, and where you can go to get approved. I'm going to teach you how to get microloans even if you have bad credit. I'm going to teach you how to get approved even if you don't have collateral, even if you've been denied before with other kind of financing and think there's no way you can qualify. Even if you're a startup, I'm still going to show you ways that you're actually able to get approved with microloans. We're going to dive into the sources who will approve you. We're going to dive into some of the terms that they offer, the loan amounts, the interest rates, all the kind of stuff you need to be able to get a microloan up to $50,000 for your business. If you hang around to the end, I'm also going to get you access to our funding vault of 27 killer ways to get money for your business. So we got a lot to cover. Let's jump in and get going. So what happens when you need a little bit of money, but you don't need a lot, right? So there are places where you can go to get millions of dollars in financing, $1 million, $500,000. Okay. And often with a lot of interest that you pay, or, you have it paid back over a shorter term or even a longer term. Okay. But again, the reality is that a lot of people might not need that much money to fund their business. As a matter of fact, the statistics show that an average startup business only needs about $10,000 to actually get your endeavor off the ground. So what if you don't want to be tied down for so long, or you don't want to take on a bunch of debt, or what if your chances of getting a lot of money aren't too high? And this is one of the things that I commonly see is that entrepreneurs try to get all their money from one place. They're like, I want $250,000. I want somebody that gives me a $250,000 credit line. But it's way easier to get five $50,000 credit lines than it is to get one $250,000 credit line, because that one that's giving you $250,000 is taking on a bunch of risk. So a lot of people actually might not need to get a lot of money or want to get all the money in one place. So in an easier path to approval. Or what if, just a little is enough? What if you only need 10 grand, 20 grand, 30 grand, 40 grand, or even $50,000 for your business where you don't need a lot of the higher loan amounts that a lot of regular conventional lenders and fintech lenders offer? Well, that's when you really want to consider a microloan. That's when that can work really well for you. And hey, Ricardo, thanks for tuning in from LinkedIn. And Willie is not having an issue with sound, but I don't think anybody else is, because I haven't seen anything here yet. And somebody's mad, angry. I don't know who that is that's angry. Derek, why are you so angry? Derek seems like he's giving an angry response on Facebook. So let me know what's going on, and I'll try to make sure that it's fixed. So microloans are business loans with relatively low interest rates. And generally these loans are offered to small or developing businesses with modest capital requirements and little to no revenue history. So what's important here is that microloans are very common for startup businesses. Now, this term startup business can apply to you if you've been in business 3-4 years, but the reality is here, they kind of just described it. If you have little to no revenue history, microloans can work really well, even if you don't have good credit, even if you don't have a track history of producing a lot of revenue, even if you're just getting the business off the ground, or if you're in the first few years where you're not generating a lot of revenue. Now, microloans, as the name suggests, are basically just smaller loans. They're different than traditional bank loans because their loan amounts aren't typically as high. A lot of traditional bank loans might have a ceiling of, $20 million. These typically have a ceiling of about $50,000. They usually start as little as $500, and they go up as much as, about $50,000 is typically the max microloan. Some only go as high of about $35,000. So microloans may just be right for some businesses. They're typically best for borrowers with limited working capital and little to no credit history. So think about this. We just said you don't have a lot of revenue, and now we're saying you don't have a lot of credit. So you're already kind of trying to get an idea that microloans can really bridge the gap between you getting a business off the ground and then getting to a point where you can get significantly higher loan amounts. They work if you have limited credit history. They work if you have credit issues. They work if you're just getting your business off the ground. They work if you don't generate a lot of revenue. And many times they're offered specifically for borrowers in underserved communities and counties, or even prioritized for minority business owners. So if you're in those, if you're an underserved community or a minority business owner, the microloans are perfect. This is where they're most widely used. And those are communities which they basically may also be served by government grants as well. So some things to think about. Where microloans are more predominant is also exactly where you're going to find grants be more predominant as well. So when we talk about minority-owned businesses, when we talk about underdeveloped communities, these are great places to get free money through grants, and also great places to get microloans. So historically, banks in the United States haven't particularly liked dealing with them, and I bet you know why, because they're not going to make a lot of money. Banks make money on interest, and when they don't charge really high interest rates and the loan amounts are smaller, well, then there's not a lot of money to be made. And then we have all these fintech online lenders, and it's the same thing. I mean, a lot of them make their money by specializing in a certain niche, and then they charge a lot of interest. But these inherently have higher risk because you're dealing with the startup, you're dealing with credit issues, and they deal with lower returns, lower interest rates, lower fees. So again, you don't see these as commonly be out there. As a matter of fact, we don't even talk about them a lot because there's just not a lot of microloan sources out there. As a matter of fact, I think throughout the whole country, there's like 400 microloan lenders that we've even been able to find. And this is on top of thousands and thousands and thousands of fintech lenders. I mean, of the ones that offer this, it's a very small percentage of lenders that offer other kind of loans or credit lines to businesses. So the average microloan in the United States goes for about $13,000. Like I said, most startups on average need about 10 to get the business off the ground. So that makes sense to get about 13,000. However, microloan popularity has increased dramatically in the last 5 years, especially since the 2008 mortgage crisis. And of course, the current COVID-19 has been the same way. We saw some of these kind of come out in the form of grants. So we saw the EIDL loans from SBA, the EIDL. Those EIDL loans had a $10,000 grant attached in the beginning. And then that $10,000 got reduced and it was like $1,000 per employee that you had. But we've seen these even through COVID start to come up where these lenders have started to offer these smaller loan amounts. Counties, states started to offer grants and they started to offer their own microloans. Okay. And then we also saw that they came as part of the EIDL loans in the form of a grant. So microloans have really become very popular through COVID. As a matter of fact, if I see a lot of funding products like business revenue lending declined, because a lot of people's revenue declined, we saw microloans really spike. And in large part, it was actually done by the government. It was done by the states. It was the states that were offering their own loans. It was the counties that were offering their own loans, and the government coming in with EIDL loans, which wasn't or EIDL loans, which the 10,000 wasn't really a loan, it was a grant. But these smaller loan amounts, whether it be grants or microloans, we saw become very popular through COVID. Okay, so now a perfect storm of challenging financial times and very tight credit market has led to the increased demand. And again, that's exactly what happened with COVID, right? Challenging financial times and very tight credit market. The market tightened up, even though the government tried to pour a bunch of space in. And you heard that during this, they were trying to open credit markets. It just didn't fly. Your Chase, your Bank of America, all those guys tightened up when COVID first went down. So online platforms put large numbers of lenders invest money into small businesses that they can learn about while having tools to give them confidence. So a lot of these online platforms have become more popular for microloans as well. And also it's just kind of like a real checks and balance system where a lot of these I think are available now through lending platforms or through marketplaces is about some of the only places you're actually going to find them. So let's talk about the SBA microloan program. This is where you can get up to 50,000. Now, even their average is congruent with what we find with the national average of about 13,000. And they're kind of the intermediary lenders in this space. These aren't really offered by big conventional banks like normal SBA loans. They're basically offering them direct from SBA through what they call their intermediaries. Okay, so SBA lenders are nonprofit community-based organizations with experience in lending, as well as management technical experience. And these intermediaries, which I cannot say that today for some reason, administer the microloan program for eligible borrowers. So again, what's interesting about SBA is that I say this all the time, SBA doesn't lend money, they guarantee money. So if you get an SBA loan from Bank of America, that's where you got the loan was from Bank of America. Bank of America is lending the money. SBA just says if you ever default, they'll cover 75, 80, 90% of the loan amount or whatever it may be. Microloans are actually come right from SBA. And the reason for that is because big banks don't want to offer them. There's no money to be made on these. So the big banks don't want to work with them. So they then use these intermediaries through SBA to actually offer the funding. It's why you don't hear a lot about SBA microloans because they're not offered by the big banks. The big banks tout SBA loans all over the place because it's the one way that they can lend money because, banks are government insured. So they have to be very conservative on the risk. So they primarily, for the business space, lend SBA loans. And that's why SBA loans are so popular because banks tout them. They promote them everywhere. But microloans are popular because the big banks don't promote them because they don't offer them because they don't make any money. So that's where SBA's come in and found another way through these nonprofit type intermediaries that are actually where you go to get microloans. Now, another great source outside of SBA is Kiva, and they actually have crowdfunded loans. So they'll actually come into crowdfunding. And of course, to bring you up to speed with crowdfunding, when we talk about crowdfunding, we're talking about people like you and I, just regular individuals, people, and we put money in and then they pool our money together and then they lend it out in larger amounts. And so, through Kiva, these lenders actually come in and basically are offered from crowdfunding and increments as small as $25. Kiva crowdfunds loans for borrowers in more than 80 different countries, and borrowers don't have to be in a specific industry. Kiva does not collect interest on its loans. Okay, so again, no interest loan for startup, pretty cool way to go, right? If a loan doesn't fully fund on Kiva, most of Kiva's field partners give borrowers access to credit before posting their loans on the Kiva website. They call this pre-dispersal. So again, the nice thing here is that even if Kiva can't directly help you, there's other ways through their field partners that they can actually assist you. So I like Kiva quite a bit. As a matter of fact, Kiva does a lot in a lot of countries around the world to promote entrepreneurship. If you don't know about them, you should look into them, because we actually do some donations and things to Kiva because they do a lot to help entrepreneurship around the world. So a great organization to look into, especially if you want to talk a little bit more about microloans. Now, they cover their operating costs through voluntary donations made by Kiva lenders. The rest of its costs are covered through grants and donations from foundations and supporters. I told you we contribute to Kiva. I think it's a great organization to support. If you support entrepreneurs, you really need to look into supporting through Kiva. And also, they select field partners, local representatives around the world contribute to small platform fees. And Kiva never takes any money from its lenders. 100% of the funds lent on Kiva go to funding loans, and there's a 97% repayment rate. So I love these repayment rates because it goes to show you that, a lot of people think startup lending is inherently risky, but the people that I've seen in the space that lend to startups, let's use Kiva, for example, let's use Upstart in the peer-to-peer lending space, they all tout 95% plus pay-through rates on their borrowers. So it just goes to show there is a world where you can lend to startups without it being really high risk. And you can learn more about them at kiva.org. And Johnny says, can I get a grant to fight COVID? Maybe. There might be loans specifically for that purpose, but those loans are going to be more dedicated to, or those grants are going to be dedicated to actual people in the space of creating vaccines, et cetera. And Mahogany Lifestyle says, hey, Ty, it's Joy. Hey, thanks for coming in. I appreciate you coming in and joining us today. Okay, so also you want to look into the Opportunity Fund. Now, the Opportunity Fund provides loans to low and moderate income borrowers, immigrants, women, and other underserved communities and classes. Investor puts money into the Small Business Impact Fund, and its initial round offers investors 2- and 5-year loans with a nominal spread over a benchmark U.S. Treasury rate. So if you know what the Treasury rate is, you can look it up online. They don't charge much more than that. The fund has a 95% repayment rate. You can learn more at opportunityfund.org. That's opportunityfund.org. So another really good source for microloans. And again, you're able to come in and get longer term, 2 to 5 years, smaller loan amounts, like I've mentioned, less than 50 grand. Now, another great source, and one of my favorite sources for lending, is Accion. And I don't talk about them enough, but I do talk about them a lot when I'm talking about loans for women entrepreneurs, loans for minority entrepreneurs. Accion just specializes in that space. They really help a lot of underserved entrepreneurs that have a tough time getting money. So while they do provide loans up to $1 million, they also provide loans as small as $300. To qualify, you need a credit score of at least 575. I told you I would give you options today that could work for you even if you have challenge credit. No bankruptcies in the last year, no foreclosures in the last 2 years, and no more than $3,000 in unpaid tax liens or court judgments. That's what you need to do in order to be able to get approved with them. Startups must have a cosigner. Accion specializes in loans to underserved groups such as women, veterans, members of minorities, disabled entrepreneurs, as I mentioned, and you can access more about us.accion.org. Don't forget, they're good even outside of microloans. If you're a veteran, if you're a woman, if you're a disabled entrepreneur, they have a lot of programs where you can get up to like $1 million. So consider them as well if you're in one of those underserved groups, and also consider them for microloans. Like I said, one of my favorite lenders, just because I think they go after a really good cause. It's very important to me for underserved groups to be able to access capital, and Accion's really an easy way to make that happen. So let's talk about Grameen, where they work to help entrepreneurial women who live in poverty. And the intent is to help them become more financially mobile. And they provide microloans starting at no more than $2,000. And they also provide financial training and support to members. So they really are very good at not only getting you the money that you need, but they'll also actually help you with the training that you need to be successful. As part of the programs, members open up free savings accounts with commercial banks and make weekly deposits. And they also report microloan payments to Accion. And thereby, they basically are helping you build business credit as well as getting money. I love Grameen too. And you can access them at GrameenAmerica.org. On deck, they also provide loans starting at $5,000. You've got to be in business for at least a year. You need to have revenue of about $100,000 or more, and you need to have good personal credit, and they will check business credit as well. They actually just got purchased through all of this that happened with COVID, but they still got loans that start as low as $5,000. So they're very good, even if it's a newer business, to be able to help you there. And Lift Fund. So based in Southern U.S., San Antonio, but they also plan to open more locations. Lift Fund is a 501c, so they're a nonprofit. Their loan amounts start at $500, and these microloans are also meant to help small business owners improve their credit and become more likely to qualify for a bank loan in the future. This is a good point. We talk about bridge loans in some of our training. Bridge loans bridge the gap between what you can get now and what you want to get long-term funding. So a lot of microloans kind of serve as bridge loans. And that's what they're saying here is they're bridging the gap between getting you money now and then being able to qualify for more money through conventional bank loans with larger loan amounts in the future. You can get approved with them at liftfund.com/loans. That's liftfund.com/loans. Okay. And you also want to look into the Justine Peterson organization. So they actually serve existing and startup businesses. They offer safe and affordable capital as well. And their goal is to graduate businesses or individuals back to mainstream financing. So again, we're bridging the gap here. We're bridging the gap between your money you want to need now to get to a point where you can get bigger kinds of loans, and microloans, again, really serve well for that purpose. They offer loans starting at $500. Okay, and Justine Peterson offers microloans through various different providers. These currently include CDFI, or the Community Development Financial Institutions Fund, and also the USDA. Okay, rural Missouri only for USDA, and SBA microloans, which we talked about as well. So what I like about JustinePeterson.org is JustinePeterson.org has multiple different microloan sources. So you can go to one place and get access to many different types of microloans through them. I just mentioned USDA and SBA and CDFI, but they offer more sources other than just those. That's just to give you an idea of where some of their sources are that offer these kind of microloans. Okay, and you also want to look into the Business Center for New Americas. They are for new Americans, and a microloan start at $500. Loans above $3,000 must have an additional guarantor, and the guarantor is required to pay if the borrower basically defaults. That's what a guarantor is. And borrower must match 20% of the loan amount with equity in the business, and the borrower must not have declared bankruptcy in the last 12 months. You got to give up some equity here. It's an equity play in order to actually get the loan, but again, not a bad way, because if you're getting between $500 and $3,000, you might not need a guarantor. If you over $3,000, depending on your credit, you might need a guarantor. But again, works really well even as a startup. And you've got to show sufficient cash flow to make monthly payments. Of course, with all loans, that's what they care about most, is your ability to pay them back. And you've got to have all required licenses that you may need. And they do require a minimum. They do not require a minimum credit score, but there is a pattern of non-repayment of other debts, or you've got a history of not paying or can't show that you have a willingness or ability to pay. They're not going to approve you. Guys, that's lending 101. Like, if they're always looking for a track history that you've paid other people as agreed, and a willingness and ability to repay. And that's the same with them. You can get them at nybcna.org. That's nybcna.org/microloans. Again, no credit score requirements. You're able to get this as a startup business. I've never in one presentation shown so many options where you can get them as a startup and you can get them with bad credit as well. And these microloans are a great solution for a lot of you to be able to do that. And Paul says, how can I use my EIN to get a loan? If you're talking about your EIN only, you'll never be able to unless you really establish your business credit. If you want to get around providing a social security number and a guarantor for loans, you have to have a very well built out business credit profile and score. That's what personal guarantees are. They're required when your business can't stand on its own. So Paul, in order to get loans, financing, other things like big companies do without a guarantor, without it being attached to your name, you really have to build business credit. And when you get about 15 accounts in your business credit report, you can start to get auto financing without personal guarantees and credit checks. And then other loans and credit lines will open up the more business credit is established. So qualifying for microloans, provider requirements are going to vary, but they're basically looking for sometimes a detailed business plan. You have a plan of what you're doing with the business, how you're going to spend the money if you're a startup. A good business credit report, some of them look at that. So you want to start establishing some initial business credit. This could be a factor that some of them look at. A willingness to invest your own money or some of the equity of your business. Again, all of them aren't looking at this, but some of them are looking for these type of things. Willingness to invest your own money or even contribute some equity in the business. Okay, so those are some things you might want to expect some of the sources may want to see from you in order to actually approve you. So again, if you don't need a lot of money, you need a little money, you really want to look at microloans. Loans from $500 up to 50 grand in most cases. Again, especially if you're an underserved group or an underserved community, these are great solutions. And in those same underserved groups and communities, there's also a lot of grants that you want to look at our other training on our social channels about grants that you can access as well. And again, you're able to get these, as you've seen, without having really good personal credit, without having really good business credit. So if we can help you along the way, I gave you the sources so you can go to them direct, but feel free to give us a call. We help our clients get financing. We help people that even aren't actually paying us as clients to get funding. We don't charge you any money to do so. Don't get me wrong, you're going to pay normal interest rates and fees that lenders charge, but we do so much volume with these lenders. We typically get you discounted rates and fees than what you'd even pay with them directly. If you got value, do me a favor, hit the like button, hit the love button. That's the one thing I ask from you is just tell the social channels this is good, valuable content so they can actually show it to other people. Even share it yourself if you got value here. And don't forget to give us a call. You get a free consultation with us for business credit funding. We help you get your business credit reports for free. It's $249 if you get them from the Bureau. We go through those reports. We give you tips and tactics to build your business credit for your EIN that's not linked to your social. So as Paul suggested, you can start getting money for your EIN that's not linked to you personally. We also do a fundability assessment to see how your fundability is. A lot of people have messed up things like how their entity is set up and how their records show online that are basic things that once fixed immediately open you up to funding opportunities. And a lot of people don't know about that. So we do a free funding assessment for you as well. And we also come in, we talk to you about all the money you can qualify for now, all the loans and credit lines you might be able to get right now. We tell you about those, and that way you can probably qualify for a lot of money that you don't even think you can get. And all that happens on a consultation, so feel free to give us a ring at 877-600-2487 or email info@creditsuite.com for that. And if you got value, go to the top right of our page, creditsuite.com. Subscribe on our channels. Different things happen on all of our channels, guys. Okay, we go live on several channels Tuesday, Thursday at 1, 11 o'clock Wednesday on Facebook, on LinkedIn, on YouTube, and on Periscope. But then we have daily tips on places like Instagram and Twitter. We have hundreds of videos on YouTube that can help you. We have a podcast that you can listen to on the go, the Business Credit Financing Show, with all kinds of guests that come on with growth strategies to grow your business. All of our links can be accessed in one place, the top right of our page, creditsuite.com. And Kelvin says, will Accion give you business loan that will not report to your personal credit? They do offer, from what I know, both. They offer loans that will report on your personal credit, and they offer loans that don't. So you just need to clarify with them what you want. But yeah, they do have options both ways. So I'm going to go ahead and wrap this up, everybody. Thanks for tuning in. I look forward to helping you get capital for your business on our next training. We talk about how to get the most money at the best terms. Don't forget to give us a call for your free consultation and let us know what we can do to help you get business credit, get financing, and also improve your fundability. Thanks. Have a great day.